Yesterday, we saw stocks spiking up in the morning only to come crashing lower, leaving several stocks and indices with nasty bearish engulfing candles. The question we got to ask ourselves is this going to be the start of what could be a major correction, or are the bears about to get wrecked? Well, today, the most important thing out there is going to be Mr. J. Powell taking the podium at Jackson Hole's speech. Could rally stocks around a soft landing, but messaging is key. And we know they've been talking about soft landing, but we know the BLS just revised the jobs data out for this year, down 810,000 jobs. Then we look right here, Powell's Jackson Hole speeches tend to lift the stocks, but when they don't, watch out, it ends up being a doozy. And this is what I'm watching out for today. We can see in the past when J. Powell has not lifted stocks, it has been dismal, 2.6% down, 3.4% down. And on the upside, it's nowhere near the levels that we saw on the way down. Now, when we look at the markets today, since we sold off yesterday, is J. Powell going to be able to lift the markets back up with the S&P potentially coming all the way back up, making new all-time highs? We come out this morning, we take a look at the dollar index, which is down 11 cents on this session. We take a look at the precious metal gold. Gold is on the move up once again, up 18 points. But right now, for all intents and purposes, gold is showing that it may have an inside day unless it can get above the high from yesterday or down below the low from the prior day. We look at the volatility index this morning, and yesterday the VIX was up, but right now in pre-market, the VIX is actually down 64 cents on the session. You can see when London opens, the VIX gap lower. We've been drifting lower so far out here in pre-market, but like I said, 10 a.m. is going to be critical, but it's not just Powell. All right, yes, Powell is going to be the main event, but we also have home sales coming out at 10 a.m. Then we look later in the day and we have 3 other FOMC members speaking throughout the day. So you also want to be mindful of that as well. We look at the fear and greed index. You can see right now we're sitting at 47. We just slid down a few ticks from where we were yesterday, but we're still in neutral territory. We're not back in fear. We're not in greed. We're like dead center. And that really raises the question. So are all these stocks yesterday, like Microsoft, being overblown where it had a doji a day before? We get a nasty down candle. Is this going to be a fake out trying to trap lower level shorts and we're getting ready to run back up? Or is this the correction we've been waiting for? We know September's can bring some ugly times for the stock market. We come over this morning, we take a look at the diamonds, the Dow Jones. What do we see? A bearish engulfing type of candle right up here near where the previous highs were. Now, one thing to note, the more times we come up and keep trying to press into this high, the more likely that level will give way and we'll see stocks going higher. Then as we look at the small caps, giving it up yesterday with a bearish engulfing candle, basically engulfing the body of that hammer candle, which could be part of an engulfing type of candle. Now, to the downside, one of the areas I would want to watch would be this gap being filled all the way down here about 206.75. If we see weakness out in the market today, that's one area we most certainly want to focus on. Then as we come over and we look at the QQQs this morning, what do we see? Yesterday, we had a nasty bearish engulfing candle, but on the daily chart, the MACD indicator still looks strong at this moment. We look right here on the profile, we basically rejected off this high volume area. Now, the next area is going to be down here about 463.05, and that would actually come down and fill the first of 2 major gaps that we've had on this large move on the way up. If we measure the Nasdaq from the low all the way up here to the high, you can see the Nasdaq has rallied up 14.5% from low to high, and we haven't had any type of retracement back down. We had no type of Fibonacci extensions to take us up towards that price point. Then out here on the 4-hour chart, we see the MACD indicator trying to pinch together, not there just yet. And you can see in pre-market, the Qs are up 4 cents on the session. So the Qs right now above the last 4-hour candle. Now keep in mind, we have these gaps a little bit more evident, and you can see just how much volume was built out where the nearest gap is. Then on the 1-hour chart, MACD indicator is almost at the 0 line. The lines have a bearish cross, but the market turns back up. The MACD indicator gets towards the 0 line. This could be nothing more than a recharge point to see the market going back up higher. Then out here on the 30-minute chart, we're already below the 0 line. And now the question is, are we getting ready to firm up or are we going to go back down? And I want you guys to think about this one way. The market likes to cause maximum pain. So yesterday, all the bulls that were overly excited got crushed. Now, anybody that started to short near the lower levels, if the market rallies up today, go ahead and wipe out those shorts, bring it way up higher than anybody thinks. Then next week, bring it all the way back down. So then you've in effect crashed the longs, wrecked the shorts, Then it came back up. You get more bulls to jump back in towards here, and then boom, they bring it right back down again, inflicting maximum pain on the market. We look at the volume profile levels. Value area low will be down here at 473.80. The point of control will come in at 474.97, and value area high is going to be up here at 479.65. So this morning, if we break above value area high and we can hold above it, I want to keep looking for higher prices. But if we get above it and we start coming back down, we got to be on the lookout. One of the targets I would want to focus on would be here about 477.88, then down towards 476.44, point of control, and then value area low. Anything below value area low, aka the low of yesterday, then I would want to focus on some of these open gaps, either playing gap support or the complete gaps all the way down here being filled. Now I want to make everybody aware, Apex having a massive 80% sale off all their valuation accounts, $40 reset fees, pass in as little as 1 day, and even better, they have a special activation fee for all accounts, only $85 for a lifetime. If you guys want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Then as we come over, look at the weekly profiles, and you can see this week we've had a much tighter range than what we've seen from the last 2 weeks. Keep in mind, we still have this untested value area high, 19,424. And I don't know that we're necessarily going to make it down here today. Could we? Yes, it really depends on what Jay Powell has to say. And this could actually be setting up a little ABC pattern on the way down. If we start to get the turn, and we start coming back down towards this low, then you guys want to be very mindful of a potential A to B equals C to D pattern. Now that pattern would not be validated unless we take out the low. And if this ends up being the high where we are right now, that would actually bring us right here towards this minus development area, which we'll talk about here in just a few moments. If we go up a little bit higher, you can see we can go all the way up to about here and still make an ABC pattern that could take us down, basically retesting last week's value area high. Now we come out here and we look on the daily profile. This is the area we drew out in last night's video, and last night on stream we had an amazing session of trading. In case you guys didn't know, I stream live Monday through Thursday 8:45 p.m. If you'd like to join me, all you have to do is make sure you're subscribed and you have the bell notifications turned on for all. So now that we're in this zone, I want to be very cautious. This could be an area, one, that acts as a magnet, which we're already there. Two, this could be an area where we start to see a reversal in the market. Now, where might that reversal take place? Well, we're going to have to wait and see, all right? Now, we'll see if indeed that reversal does manifest. Keep in mind, last night we were below value area low. I said this is a high probability target. It'll likely get tested. Boom, that level has already been tested. Now we have the rotation on the way up, but point of control is all the way up here at 19,903. Keep in mind, we have another minus development area right up here, which could also act as a magnet in an area where the market wants to reject about 19,855 to about 19,839. So just be mindful of that. Now, if we do continue to grind up higher, this is another area we could use as a target, this high volume area on the composite profile at about 19,816. Just note, if you start to try to take shorts and around this area, you're fighting the volume profile rotation, and it may be a little bit harder of a trade. And keep in mind also, Fridays tend to be more bullish than bearish in the stock market. Now, as we come over and look at the SPY, we had that nasty bearish engulfing candle. Daily chart, MACD indicators still look strong at this moment, but my eyes are focused down here at about 544.75. Now, I'm not saying we're getting down there today, but just an area you most certainly want to pay attention to. We have a gap, we have a high volume area on the profile, both of which could attract price lower. Then on the 4-hour chart, we see the MACD indicator trying to start rolling over. We have that high volume area right near that gap. Then out here on the 1-hour chart, MACD indicator making a beeline down towards that zero line, but we need to be very cautious. Like I said earlier with the Nasdaq, if we simply start turning back up and the MACD indicator gets near the zero line, that could be nothing more than a recharge point to go ahead and send the SPY back to all-time highs. Out here on the 30-minute volume profile charts, notice price is already above value area high, which comes in at 558.65. Point of control is down here at 555.62. Value area low is down here at 555.00. So as I'm looking at this is very simple. If we stay above value area high, there's no need to fight the tape. Let's go ahead and look at some of these other high volume areas on the profile for some additional targets. 560.86, up here about 562.39. But in the event we start coming back down below value area high, then I do want to look for some downside testing. Now, some of the areas I want to focus on, just in case we're going to come down and reject back up, watch out for these minus development areas at 558.12, down here about 556.38. Then I would want to test the point of control and value area low. Notice that when we come into these minus development areas, this could be an area where the market simply comes down, rejects, and goes back the other way. So you want to be looking on the smaller time frames for potential reversal patterns. Now, as we come over and look at the weekly profiles, Notice what we're forming, a D as in dog shape profile on the weekly chart. This could be very important for next week. We're gonna see, do we get a breakout or breakdown from this pattern? Now, as we look at this, you can see we're starting to retrace back up, and we got to be open to the idea that maybe we come all the way back up here towards this high volume area at about 560.40. Now, and the question will be, do we get back above it or do we reject and start coming back down? This high volume area down here most certainly has my attention at 55.33. Then as we come over and look at the 30-minute profile, notice what we've done, right? Yesterday we opened up in value, so we're not in a volume profile rotation on the way up on the S&P right now. And if you actually look, value area high is not that far away, 56.33.25. If we get above that price point today, we start coming back lower, I most certainly want to take sell side trades. At the moment though, the bulls definitely have control. Now, one thing to note, if we do get this short to set up, I want to target all these high volume nodes on the composite profile, then down here towards point of control, value area low. Anything below that price point, let's not forget, we still have this huge minus development area at some point, which will act as a magnet, attracting price back down here, trying to basically come back and repair the inefficiencies in the market. Now that minus development area is anywhere from 54.92 to about 55.03, or maybe even 55.12, 55.14, somewhere up in that ballpark. We also have an untested point of control down here at 54.67.75. All right, let's come over and take a look at the overnight volume profile levels real quick. We have value area high coming in at a price point of 19,749.75. The point of control coming at 19,732.25. Value area low coming at 19,675.75. So right now we are currently trading above value area high. As long as we stay above it, I want to stay on the buy side of the market. If we start coming back down below it, I want to target the point of control. I want to target value area low. I want to target the additional lower levels we talked about earlier, but we want to be mindful of these minus development areas. The market could simply come right down here, boom, reject and come right back out. Now, as we come over and look at the S&P 500, you can also see we are currently trading above the overnight value area high, which comes in at 5626.75. The point of control coming at 5613.75. Value area low coming at 5610.25. So as long as we stay above this price point, I want to stay on the buy side of the market. We can look to target the swing point right over here, somewhere in the ballpark of 56.31 up to about 56.33 or so. And just be mindful, if we start coming back down, I do want to target, all these volume profile levels on the way down, but I also would like to target this area at 5619.50. Now, if you're sick and tired, if your stop loss is being hunted, make sure to watch this video right here.